So let's talk about the crypto market in 2026. It's a really weird and fascinating puzzle. You have some of the biggest names in finance calling for absolutely incredible highs, but at the same time, the general public seems to be gripped by, well, extreme fear. So what is the real story? Let's unpack this. Okay, let's just start with the number that is Wall Street completely buzzing, $150,000. That's what major players like Standard Chartered are saying a single Bitcoin could be worth. And some predictions go even higher. This isn't just random internet hype. This is a serious forecast coming straight from the heart of traditional finance.
And yet, and this is the crazy part, despite those huge predictions, the feeling on the ground couldn't be more different. The Crypto Fear and Greed Index, which is basically a pulse check on the market's emotions, has crashed down to a score of just 20. That's not just fear, that's extreme fear. So you've got the experts seeing a rocket ship, while a lot of everyday people see a reason to run for the hills.
So this is the big question, right? How can both of these things be true at the exact same time? In this explainer, we're going to cut through all that noise. We're going to look at the forces driving the hype, the forces driving the fear, and we're going to reveal the one key factor that is quietly shaping what crypto is actually becoming.
All right, let's start with the good news, the bull case. Why are these major institutions so incredibly optimistic all of a sudden? Well, it turns out there's a really powerful narrative being built, and it's backed up by some pretty compelling data and some huge political shifts. First off, just look at adoption. As of 2026, 30%, almost a third of American adults now own some form of cryptocurrency. That's a solid jump from 27% just 2 years ago. So after all the chaos, ownership isn't just holding steady, it's actually starting to climb again. That points to a user base that's surprisingly resilient and growing.
You know, a huge piece of this new confidence is coming straight from Washington, D.C. The current administration has really leaned in, taking a very pro-crypto stance. We're talking about creating a national Bitcoin reserve and even appointing a crypto czar. You add that to the earlier approval of spot Bitcoin ETFs, which, made it super easy for people to invest in Bitcoin through their normal brokerage accounts, and it sent a massive signal to the market. Crypto is being taken very, very seriously at the highest levels.
And what's really striking here is just how much everyone seems to agree. It's not just one group. You're seeing these big, six-figure predictions from giants like Standard Chartered, from the old-school technical chart analysts, and even from predictive AI models. They're all using different methods, but they're all pointing in the same bullish direction.
But if all the experts are so optimistic, why is Main Street so terrified? Let's flip the coin and dig into the other side of this story, that deep-seated fear that's really holding crypto back from going truly mainstream.
The data here is, well, it's crystal clear. The number one fear, by a huge margin, is just how unstable the value is. For a whopping 37% of people, that volatility is the biggest deal breaker. And right behind that are these really practical concerns, about getting hacked, about there being no government or bank to bail you out, or the simple, terrifying idea of losing your password and your money forever. And this slide right here, this shows you the massive disconnect. More than half of people who own crypto say the biggest benefit is the chance for the price to go up. It's all about the investment. But then you look at the people who don't own it. Nearly a quarter of them say flat out, I see no benefits at all. It's not just a small disagreement. It's like two groups of people are looking at the same exact thing and seeing completely different worlds.
And the result of that huge disconnect? It's this number, just 6%. That's the percentage of people who don't own crypto who are even thinking about buying some this year. So this is the real challenge, isn't it? No matter how optimistic the big institutions get, the industry has a massive hill to climb to convert all these skeptics.
Okay, now let's zoom the camera out. Because this whole story isn't just about individual investors. There are massive geopolitical shifts happening around the world that are adding a whole other layer of uncertainty and opportunity to the market. And a huge part of this global shift revolves around the BRICS bloc. As you can see, this is a massive alliance of major economies. We're talking over 40% of the world's population. And a key goal for them is to build out their own financial systems, to find alternatives that make them less dependent on the US and its dollar.
And look, this isn't some fringe idea from the corners of the internet. This was a major topic of conversation at the World Economic Forum in Davos. Big outlets like Bloomberg were reporting that top financial leaders were openly worried about the US dollar's long-standing dominance getting chipped away as these BRICS nations get more powerful.
This has really fueled a movement that people are calling de-dollarization, where countries are actively trying to trade and hold reserves in currencies other than the US dollar. And in this kind of fracturing world, some analysts are starting to wonder if a decentralized asset like Bitcoin, something that no single country controls, could start to look more attractive as a sort of neutral reserve asset.
So we've got the institutional bulls versus the fearful public, and it's all happening against this backdrop of global change. So what breaks the tie? What finally resolves this tension? The answer, it turns out, is regulation. It's no longer the scary monster hiding under crypto's bed. It's the very thing that's defining its future.
This right here is the new reality. According to a big report from PwC, we've basically crossed a threshold. Regulation isn't seen as a constraint anymore. Instead, it's viewed as the essential architecture, the plumbing and wiring, that will finally allow digital assets to scale up in a responsible way. It's the official rulebook that the big money needs to feel safe enough to get in the game.
And this isn't just theory. You can see it happening right now, all over the world. Rules for stablecoins are actually being enforced. Exchanges and custodians are being held to much higher, more professional standards. Consumer protections are being built right into their operating licenses, and we're even seeing crypto integrate with the old system through things like tokenized deposits, which are basically just digital dollars in a bank account.
This quote from an industry leader just hits the nail on the head. The winners in this next chapter of crypto won't be the ones trying to get around the rules. They'll be the ones who embrace them, the ones who use regulation as the foundation to build bigger, safer, and better products. Being compliant is now a competitive advantage.
Okay, so where does this all leave us? We've seen the incredible hype, we've seen the very real fear, and we've seen this quiet regulatory revolution happening in the background. It all points to a future where crypto is basically trying to be two very different things at the same time.
On one side, you still have crypto as a speculative asset. This is the story we all know. It's driven by hype, it's defined by those wild price swings, and it's responsible for both those crazy gains and the public's deepest fears. But on the other side, this new identity is emerging. Crypto as financial infrastructure. And this version, it's not about the price, it's about rules, custody, and settlement. It's the boring but critical story of institutional integration.
The real story of crypto in 2026 is that these two worlds are finally merging. That wild speculative energy is being funneled into these regulated institutional structures. So the question is no longer if crypto will be part of the financial system, but how. And the answer to that is going to decide something much, much bigger. Who gets to shape what money itself looks like in the 21st